Two key indicators of how the economy is doing will be released soon. Later this morning, we'll get a look at how many Americans applied for unemployment benefits. Tomorrow, the monthly unemployment rate will be out. This comes after the Federal Reserve wrapped up a two-day policy meeting. Alexis Christophorus has you.
The Federal Reserve admits the U.S. economy is struggling, but board members are not taking any new major steps to give it a boost. After 2 days of meetings, the Fed says it will keep interest rates at record lows, but nothing else. Wall Street was hoping for bolder action.
We have not succeeded in getting out of the depression, quite frankly, we were in. So we're muddling through.
The economy slowed down in the spring. Chairman Ben Bernanke has said the board will take further steps if it continues to weaken. But it's not clear where the recovery is headed. Home prices are up, but sales are down. And consumer confidence is higher, but Americans are not spending more.
Traders here on Wall Street believe the Federal Reserve is waiting to see what the economy looks like in the coming weeks before taking any new action.
What we continue to see is just the Fed standing ready to take action. And the Fed, up till now, has not done anything to affect the consumer.
On Friday, the government will report the latest job figures. And 2 weeks ago, Bernanke told Congress the outlook remains grim.
The reduction in the unemployment rate seems likely to be frustratingly slow.
If unemployment remains above 8%, the Fed could take more steps in September. But after 2 rounds of stimulus and interest rates at record lows, policymakers admit they're running out of tools. Alexis Christophorus, CBS News, Wall Street.
Joining us this morning is Jack Otter, executive editor of CBSMoneyWatch.com. He is also the author of Worth It, Not Worth It, Simple and Profitable Answers to Life's Tough Financial Questions. Jack, good morning to you.
Good morning.
The Fed had a few different options on the table to stimulate economic growth. They decided for now to do nothing. What was the reason?
Well, I think what Ben Bernanke was doing was he's slowly warming up the market and the world for steps that he probably is going to take in September. He hinted strongly in the statement that the Fed is ready to take action if the economy doesn't improve, if the unemployment numbers don't get better, and I think, frankly, we will see action in September.
So we're not expecting any monumental change between now and September. What is it going to take for the Fed to act?
I think really a continuation of what we're seeing right now, which is growth, but very tepid, practically at stall speed, and lousy employment numbers. We're not hiring enough people right now to even keep up with population growth, much less replace the millions of jobs lost during the recession.
What are the options that are out there? What can the Fed do to stimulate the economy?
The Fed has used a lot of its dry powder, but it still has a few levers left. It can lower interest rates even further, but of course they're already at historic lows. It can reduce, it can buy mortgages, which would reduce the rate specifically that homeowners pay, say, when they refinance or when they buy a house. Or it could reduce what it pays banks that give the Fed excess reserves. It could actually charge the banks for leaving that money with them. I think Ben will probably open door number 2, the mortgages, because that would get money back in the hands of consumers. If you help businesses, well, interest rates are already so low that, frankly, if businesses want to borrow, they can. Plus, they're sitting on trillions of dollars of cash as it is, and they're not spending it because of a lack of demand.
Are we getting to a point, Jack, where policymakers are running out of options, where there isn't much else that can be done?
Well, we are. And Ben Bernanke has said this in testimony, and he speaks very carefully. But for the Fed chief, it's been very strong. He's been saying to Congress, help me out, guys. I handle monetary policy. You handle what's called fiscal policy, which means he wants stimulus, more stimulus from the government. Obama proposes building bridges, repairing roads, getting construction workers back in the hopes that not only would we improve the infrastructure, but also they would go out and spend that money stimulating the economy.
We talked a lot about the Fed, but the Fed doesn't hold the magic wand here to fix the problem in large part. Who has to act first? What makes it happen to stimulate economic growth?
Well, the problem is you get a vicious cycle. The number one problem at the basis of our economy is a lack of demand. We built too many houses during the bubble. People spent more money than they had by running up credit card bills. The government obviously has racked up enormous debt. So now we're in the hangover stage. And frankly, we don't need any more houses, therefore construction workers don't have jobs. There's a lot of things we don't need. So slowly, the economy has to grow into those things that we built before. So eventually we'll have enough households to buy new houses and that sort of thing, but it just takes time.
With all the things that the Fed is doing, and we had this 2-day policy meeting, a lot of folks would ask, what in the world does this mean to me? But bring it home. What does it mean to the average
Sure.
person?
And its bottom line is it's bad if you are, say, an investor with CDs or a savings account. It's good if you're a borrower, say, buying a home or a car. So your savings account, your CD, they're still going to yield basically nothing. But if you are borrowing money to buy that car, buy that house, rates are going to go down even farther. So those things are going to get cheaper.
Yeah, 2 reports coming out. Unemployment benefits, that's going to be talked about quite a bit today. Got the jobs report coming out tomorrow. How are we looking? What's the outlook?
Well, what you want to see is fewer than 375,000 people applying for unemployment benefits. Recently, last week the number was way under that, but the week before that the number was above because they're adjusted for seasonal items, and frankly it's a little bit confusing. If we see anything below 375, that's pretty good. The big number is Friday, the jobs number. Economists estimate 100,000 new jobs added, probably slightly higher than that in the private sector. Generally the government trend has been cutting. But again, that's the key. If we see a great jobs number, that's really good news for the economy. If it's well below 100,000, then you can certainly expect Ben Bernanke to act.
Jack Otter, executive editor of CBSMoneyWatch.com, joining us this morning. Jack, thank you so much.
My pleasure.
And his book is called Worth It, Not Worth It, Simple and Profitable Answers to Life's Tough Financial Questions.